History is currently repeating itself, and nobody seems to be noticing what is currently happening to natural gas. And so you can actually profit from that. In today's video, we discuss the most important technicals, fundamentals, and also macroeconomics of this commodity. Let's first have a look at the technicals. We do obviously have this long stretching upwards trend in this blue channel here at natural gas, but we've recently seen the invalidation of this channel. We've seen that natural gas broke to the downside. You can beautifully see that here on the hourly chart. We've actually invalidated this $3 support level. We've now seen first a bullish breakout out of this falling wedge, but we've now retested the lower trend line of this falling wedge once again. And we at Chronos interpreted the following way. We believe this was a false breakout that actually um, led to many people actually opening long positions, but they've now probably have been stopped out, and so they had to sell their positions, and that is obviously the liquidity that the institutionals need for a bullish reversal to the upside. Additionally, we do also have a massive volume zone being right up here. And so we at Chronos do believe from the technical perspective that we do have some upside potential in the next few days, as we do have a massive volume zone. There has been a lot of volume recently at those price levels to the upside. And so this would obviously suggest we do see a push back to the upside here once again. And also concerning the liquidity, the seller's liquidity here, we could see that this is actually the market liquidity that is needed for the institutionals to step in once again. That's what we believe is concerning the technicals. We do have really important resistance levels at around $3.65, for example, and also here at $4.4. Those are resistances that we could actually retest in the next few days. If you have a look at the daily once again, you obviously would see it being quite likely that we do see a entrance into this channel once again. We are quite optimistic. We do see another pushback, another bullish trend in this channel once again. However, concerning the longer term trends at Chronos, we believe that to actually understand the longer trends here concerning natural gas, we could also see a bearish breakout. And why we believe that is exactly what we're about to have a look at now, because you have to take a look at the cycles, right? If you don't understand the cycles of natural gas, if you don't understand the cycles of money, if you don't understand the business cycles, then you don't understand natural gas. And so that's what we're about to do now. But before we do that, please make sure to subscribe to our channel and like the video so you don't miss future videos like these. And also make sure to comment down below if you have any questions or want to give us your opinion concerning the topic. Thanks for your support. Now let's have a look at the weekly here. Let's have a look at the last few recessions, at the last few cycles. And what we've opened up here is the S&P 500 and in a ratio with the unemployment rate squared and the US inflation rate year over year times the US interest rates times the M2 money supply. And what this is basically showing you is a ratio between the S&P, the unemployment rate, the inflation rate, and the interest rate, and the M2 money supply. And so when one of those four things is growing, that ratio is obviously going down. And because more than one of those four things is actually growing, in times of economic distress, we tend to see those ratios go down in economic distress. That's exactly what we've marked here with this chart, and you have seen the US recessions overlaid additionally with those red areas here. And that beautifully shows you that, for example, this crash here in 2000 have actually occurred before the recession started. Quite similarly, we've even seen this bullish rally here continue at natural gas when we've already had a official recession here with the stock market. And so this is just beautifully showing you that we can see rallies into a recession, but that is obviously not always the case. We do, for example, see this sell-off here at natural gas long before we've seen the recession here in 2020. Now, let's have a look at the correlations here. We do obviously have a correlation with this chart here in pink. Whenever this is moving to the downside, we tend to see that that natural gas is also starting to weaken or has already weakened. And as we are currently seeing, this ratio basically behave quite similarly to what we've seen happening here before the great financial crisis. We've seen a massive pullback, then some consolidation, and then a last sell-off here at this ratio. We obviously have a quite similar thing happening right now. We're also having phases of consolidation in the meantime, but overall the trend is quite similar. We do also have this downward trend here, and that would obviously suggest we could see history repeat once again. Now let's have a look at some other charts as well. For example, the copper to gold ratio. That's also a really interesting chart because the correlation between copper and gold is of major significance to understand the economy and the investors, because there are times where copper is more attractive than gold, and there are times where gold is more attractive than copper. And copper is obviously more attractive when you have business activity being up, because it's a industrial good. Gold, however, is outperforming copper when you do have the economic problems, when you do want to have a safe haven asset. And whenever we do see that ratio slowly moving to the downside, in other words, whenever we do see gold slowly starting to outperform copper, that actually triggered or that actually signaled many crashes that we've seen following here at natural gas. For example, we've seen that divergence here between natural gas and the copper to gold ratio even before this crashed, even before we've had this recession. We've seen that actually repeat several times here in 2011, here in 2014, here in 2019, 2018, here in 2021, and also right now. And that obviously would suggest we are seeing that natural gas could be topping out or has maybe already topped out here in 2026, in 2025, and that we do see history repeat once again. And in fact, that is our primary scenario at Chronos. But to build up on that thesis, we have to take a look at the gold to S&P ratio, which is also quite similar. The S&P tends to outperform in certain times, and sometimes gold tends to outperform. And whenever you do see gold actually starting to outperform, in other words, when you do see this ratio going up, that means that you also have this risk, this risk-off environment. This safe haven asset just has more demand, and that's exactly what we've seen previous to those crashes that we've seen happening, and that's exactly what happened before those sell-offs here in natural gas here in 2011, in 2015, where we've already seen a big sell-off happening, but you could argue we've seen a deceleration of growth, or a deceleration now actually transitioning into this consolidation and ultimately strengthening trend. Now what we're currently seeing is a quite clear signal, as we are seeing this ratio, this gold prices are still actually strengthening hard against the S&P. And if you now invert this chart, you just have the S&P measured in gold. And this is beautifully representing what we are currently seeing. If this is the S&P 500 measured in gold, then this really beautifully shows you what has happened to the S&P measured in dollars. Because the S&P measured in dollars is in a long stretching bull market. We've seen the S&P actually build up new all-time highs week after week. But if you actually measure the S&P 500 in gold, you see it topped out here in 2021, and we're in a bear market since few years now. And that's exactly what we like to convey to you with this video, because you really have to understand that the dollar is no constant. You have to understand that the bull market is basically inflationary driven, and when those cycles reverse, when we do have liquidity conditions going backwards again, you tend to see those deflationary crashes happen. And that's exactly what we believe at Chronos could actually happen next. We could see a sell-off here in natural gas in the next few months, even though we could see a reversal, and in fact it could actually happen quite likely to those resistances, maybe even to the upside here. We do have some time left, probably, but in the long run, we do believe that this is ultimately leading to a deeper structural breakout to the downside here at natural gas, below this lower band of this upwards channel here. I hope you enjoyed the video. If you did, please make sure to subscribe to our channel and give us a thumbs up if you appreciate our content. Thanks for your support. See you the next time. Bye bye.